Well, on the eve of the Reserve Bank board meeting to consider interest rates, Australia has been held out as a paragon of economic virtue. While the strong Australian dollar flattens part of the economy, the International Monetary Fund has only praise for policymakers' hands-off approach. The IMF says Asia should follow Australia's example. Here's Philip Lasker.
If the International Monetary Fund is correct, the United States and Europe might soon be just holiday destinations for Australians.
We see now that almost 60% of Australia's exports are headed to emerging Asia, compared with 40% a decade ago.
So Asia's economic destiny will be Australia's. It's generally rosy, but the IMF has warned that policymakers throughout the region could be sowing the seeds of the next serious inflation problem by keeping interest rates too low.
If you look at monetary policy, the stance is unusually accommodative. Australia is an exception. But beyond that, we see in most of emerging Asia real policy rates remaining negative.
Even so, the IMF expects underlying inflation to start falling next year.
But I think there are certainly risks associated with that, and inflation could turn out to be one of the bigger problems for Asia, especially if food and energy prices continue at their present upward trajectory.
The IMF is also uncomfortable with the lack of fiscal discipline throughout Asia and the tendency to focus on building up reserves by keeping currencies artificially low, making it easier to export. These intensify the global imbalances as money flows into Asia from around the world, some of it hot money, which could leave as quickly as it came.
That could create some issues for some economies in the region where capital flows have been large and have been boosting domestic demand, been large relative to the financial markets, stretching valuations and fueling credit. So these are risks that we continue to monitor at the fund.
The fund warns an undisciplined approach now increases the risk of social upheaval later.
In addition to dealing with just overheating, Asian policymakers need to pay more attention that growth remains balanced and inclusive, and there are concerns that this has not been the case as much as policymakers would have wanted.
What the IMF wants is the Australian approach, an unrestricted currency, budget discipline and generally higher interest rates. As for those Australian businesses hurting due to the strong Australian dollar,
over the medium term, I think my point is we will see Australia remaining an important trade partner with Asia, and it will absorb and use this mining boom to build the rest of its economy and to strengthen the rest of its economy.
Some of Australia's highly praised policymakers will consider interest rates tomorrow at the Reserve Bank board meeting. They'll have the recent stronger than expected inflation numbers to mull over, suggesting inflation may not yet be beaten.
It does send some warning bells off, but we're going to need to see another inflation number is the bottom line, and so we're not going to see an interest rate increase tomorrow. We will see tough talk, I imagine, from the RBA.
Tough talk, which hopefully will delay the need for tough action.